and thanks for joining us for episode 3 of our transition series. In today's episode, we'll be discussing some of the accounting assumptions and elections you'll have to make as you transition to ASC 842. With me today is Sarah O'Sullivan, Director of Product at Lease Query. Hey, Sarah.
Hey, Emily.
So we're talking about accounting assumptions and elections, and specifically today we're talking about practical expedients. So the first one we'll start with is the package of practical expedients. What exactly is this package?
Right. So one of the things that the board provided with ASC 842 are several optional practical expedients, and all of these were designed to ease the cost, the time, and the burden of implementing the new accounting rules. It's a big project. So some expedients are there voluntarily. You can choose, try to make it a little bit easier for your organization. And that first one is what you referred to as the package of practical expedients. And it's a package because it actually has 3 expedients within it, but you must elect them all together. So you're either going to elect all 3 or you're not going to elect any. You can't, pick and choose. And by electing this package, what it means is that companies, when they're adopting 842, they will not need to reassess 3 things. And first being, they won't need to reassess whether their existing contracts at the effective date are or contain a lease. They're not going to need to reassess the classification of their existing leases, and they won't need to reassess the amount of initial direct costs for their existing leases. So the reason for this is there are some differences between ASC 840 and ASC 842 related to the definition of a lease, what the specific classification criteria are between operating and now finance, used to be capital, and what makes up initial direct costs. So there's a few differences, some nuanced differences here or there. The benefit is that companies will not need to review all of their existing leases and other contracts to compare them and scope them according to this new 842 definitions and criteria. The caveat to this is that the contracts have to have been properly assessed initially under ASC 840. So as long as you were following those requirements for lease criteria, classification, initial direct costs, and they were in compliance with 840, then you can carry over those conclusions for your new 842 accounting, and you don't need to go back through each lease and reconsider them.
That's good to know. Okay, so if you were doing it correctly, you can continue doing it correctly. Otherwise, maybe revisit your data.
Right.
All right. So the next one we'll talk about is the Hindsight practical expedients. And this one's a little confusing. Hopefully you can provide some clarification.
Yeah, it is a little bit confusing. You got to think through what it's saying and what its results would be. But the Hindsight practical expedient means that you are allowed, if you choose to elect this expedient, you are allowed to use hindsight. So essentially, when determining your lease term and considering right of use lease asset impairment, you are able to consider any of the facts and circumstances that exist or have come up since the original commencement of that lease when making these determinations. So an example might be, if and how an entity exercised lease renewals or purchase options back at the initial commencement date, you might have come to the conclusion that you were not going to elect these types of options, but maybe something's changed in your strategy or your business or the market that you're working within since that time, and you would come to a different conclusion now. What this expedient says is that you are allowed to use that additional information and apply that when you are adopting 842 for determining these things and making your 842 transition. So the plus side is the hindsight expedient. It can result in greater precision and accuracy with your lease portfolio. You're being really precise and using all your current knowledge. But the reality is that using that hindsight, it can be a complex and time-consuming task, and really not many companies are electing to do so.
Okay. So it says like, hey, then I didn't know I was going to exercise that option, but now I do. So I'm going to use that entire lease term when, calculating my lease liability and my right of use asset. But you would have to go through the exercise first to know whether or not, I don't know, it seems like a lot of work. You're right.
Yeah.
Okay, so then the next one we'll talk about is the expedient to not separate lease and non-lease components, which is a crazy way to word things. So let's try to simplify this one.
Sure. So let's start with, recognizing what we mean by separate lease and non-lease components. And what 842 requires is that each individual component of a contract needs to be identified and accounted for separately as its own component. So for example, if you are a lessee, you're a company, and you're leasing a floor of an office building, and as part of that arrangement, you're also going to receive common area maintenance. So this represents two distinct contract components. You've got your lease component for the office space itself, and then you've got the non-lease component, which is for those maintenance services that you're receiving from the landlord. So according to ASC 842, the rules say that you should be separately accounting for these two contract components. However, the board did provide this practical expedient, and it allows you to choose not to separate those components. And instead, what you would do is you would account for the entire contract as a lease. So everything would get this new 842 lease accounting. The benefit of the expedient, it helps you as a company, it saves time, reduces some complexity when you're measuring your lease liability and your right of use asset balances, rather than having to go through the whole process of identifying each of those separate components and allocating the total contract consideration to each of those. That often takes a lot of judgment. You can just default to accounting for the entire contract just as a lease. And so, however, the drawback, what you need to evaluate when you're trying to decide if you want to elect this expedient or not, is the fact that by combining your separate components, you're actually going to end up with larger lease liability and asset balances because you're including everything in the contract in together with the lease. So that's going to have a direct impact on your financial statements. And it could also be something that you need to factor in when you're doing your ROU asset impairment analysis later on, whether you want to have that larger balance that has other items included in there.
Okay. And this is another one where you would have to go through the entire exercise to see if it's really worth, making this election or not, right? Like, I think Target went through this when they early adopted, and they did a lot of work and decided that it wasn't worth it in the long run. The juice wasn't worth the squeeze, as it were.
Yes, that's right. And you can apply this, you can elect it at the underlying asset class level. So you do not need to elect it for your entire lease portfolio. So yes, you might find that you have asset classes that are a greater significant material amount of your balance. Maybe it's worth separating the components there, but maybe for some of your smaller ones, it's not. So you can make that decision, but agreed, you need to be able to do some of the work around it to get the difference in the numbers to see whether it's something you want to do or not.
Got it. And then the final thing we'll talk about today is this transition option practical expedient. What's this?
Yeah, so this one says, so while ASC 842 does require everybody to adopt the new standard using a modified retrospective method, you as the entity, you can choose whether you want to apply it, the new accounting, as of the beginning of your period of adoption, so your current period when your effective date, or if you want to apply it to the earliest comparative period that you're presenting in your financial statements. So to clarify that, consider that your balance sheet, when you are presenting that in your annual financial statements, you have your current year, but you are also including your prior year as a comparative period. When you're adopting ASC 842, you can choose to either only apply the new accounting to that current year column, or you can say, I want to restate the prior year as well, so that my entire balance sheet, all of it is being reflective of the new 842 accounting. And so choosing to restate the prior periods, that may be a benefit to you because it's going to have everything under the same standard, the same disclosures, everything will be comparable, but it's going to take you more time and effort. So the other option is to only apply 842, transition as of your current effective date, your adoption period. And that is going to mean less time and work, but it is going to mean that you're going to have some periods of your financial statements that are still being presented and accounted for under 840, and you're going to have some of your financial statement periods that are under the new rules.
So then when, the financial statement users are looking at them, they're not really comparable, right? So you're not looking at apples to apples, because one year you have a right of use asset and one year you don't.
Yes, that's right.
Awesome. All right, well, I think that's all we have time for today under the accounting assumptions and elections. We hope you found today's episode helpful. As a reminder, we have many other episodes in this transition series to help you simplify complex accounting. In our next episode, we'll demystify the right of use asset and lease liability and discuss the basics of each.